Alright, welcome back to the channel. I'm Crypto Trend Trader, and today we're going to be talking about Wyckoff accumulation and going through the events and phases of accumulation. But before we do, I just want to say this is not financial advice. I'm not a financial advisor. I'm just giving my insights on the market and sharing some of my education that I've learned about technical analysis. If you do enjoy these videos, please feel free to like, subscribe, leave a comment if you want to see something in specific. But we do appreciate it. It really helps out the channel. That being said, let's get started with the Wyckoff accumulation and events phases. So basically, we've come up from on a long, massive uptrend all the way from 3,000 to basically coming in here in the 7, 8, 9,000 range, and we're starting to see some topping coming in. We've come off a parabolic move. We're starting to see some sell-offs. This is one of the biggest corrections we've seen throughout the entire trend. And that's going to start telling people, okay, this might be it. We keep pushing a little higher. We're starting to see like higher volume than we have throughout the trend, and that's essentially the preliminary supply phase. We're going to start correcting, put in a base. We see some buying and selling, a little deeper retracement, and that's in our phase A. It's then going to move back up here, and we're going to go parabolic once again, but this time even more so. The buying is going to come in intense. We'll keep seeing, as we put in a new high, just people expecting it to top, so we see random people selling into it, but it keeps getting more and more intense. We'll see the biggest spike, parabolic move. Buying and selling start coming in, so the volume is just on another level than anything we've seen throughout the trend. And what that is that's people buying in and selling at the same time, essentially fighting for, is this the top? Should we be buying or selling? And then finally, we're gonna max out and put in our first resistance line for the trend here. Come back down, and we're going to see now our selling climax. And what that is the intense selling. Once people realize we've topped, they get scared, just start dumping their positions, and then you'll see a spike down essentially that's going to go lower than where the price probably should have. Most of that panic selling is going to get absorbed by larger institutions, larger buyers or traders. And then we'll start putting in a base, a little reaction rally, and then come back down for the completion of phase A, which is basically the secondary test. And that's going to form our first support line for the accumulation or distribution phase. And then we're going to see our rally off that. We'll start coming up, stepping up, start looking good again, coming back up to the old high, and then we're going to reach the top of the automatic rally. It's basically a reaction rally. Oh, that was it. Let's keep going. But the market is still unsure. You start seeing the selling start declining. Buyers are stepping in, it's moving up, and then essentially it just doesn't have the steam to keep going. So you start seeing it drop back down. A lot of this short covering is done, and then people are seeing it's losing strength, so they start shorting again. And that top of the automatic rally is going to lead us back down into the secondary test of phase B. Oftentimes that secondary test is going to come down lower. We'll put in a lower low. People think this is it, start shorting, and then bam, it pops back up, comes back down to test, and that's going to form our support lines for this entire trend. And then what we're looking for here is essentially what develops inside of it, so we can determine, is this going to be accumulation or is this distribution? So as we kind of bounce around throughout here, some of these actions are not going to occur exactly in the same order, but we're going to, at some point in time, if we're determining this is in fact accumulation, we're going to see a sign of strength rally, which is going to be a powerful upward thrust, very little selling, lots of buying. Price is going to be shooting up to the upside. People get excited, start thinking we're coming in. We're usually going to put in a higher high here, and then a lot of times that's going to end up being a fake out, and it'll sell back off, and we'll see it bouncing around in here. A lot of people will be trapped. You're seeing, basically the market is just fighting to see, are we going up or down from here? And then what we see a lot of times after this fake out on the sign of strength is we'll see it dump down, and sometimes they'll be in opposite order, but we'll come into phase C, we'll see it dump down low the support for our spring. And what that is essentially the opposite thing. People are going to try to sell the breakout and short, and then the strength comes in, we buy back up, there's short covering, price coming in, everybody's trying to get in, we sell back off, and then what we're looking for is that retest. The retest of the support lines are basically confirming, okay, there's no more selling coming in at these prices, we're going to go to higher prices. And that's going to enter us into phase D. And with phase D, we're going to come up, basically, start rallying off of it. People start realizing, okay, this might be the real deal. And then we'll see our last point of support is going to come in. It's basically the last chance for a good entry before the breakout, or one of the last chances before the breakout of our trading range. And that's going to basically just be a little pullback, people seeing, okay, is there any more selling? If it gets bought right up, it's going to be a confirmation of strength. And from there, we'll usually break to a new high. We're going to break over any other high we put in during this accumulation phase. And that often is the final sign letting the market know there is no more selling and there's more demand, so prices are going higher. And we'll see what's called a break, a hook, and a go. A lot of times it's just going to come back, confirm our support lines, confirm where what was resistance will now be support, confirm that the market does indeed want to go higher. There's no more selling at these prices, and then boom, we'll see an explosive move. And that's our, you can call it the breakup or back up, but essentially it's just the market confirming, hey, we're going to keep going with this trend. The accumulation has taken place. People wanted to buy more at these prices, held the price down long enough, and now it's time to go. Everyone's filled their pockets, and the bears no longer have any strength. The bulls are taking over, and who knows, off to new highs after that. It's not far from 20,000. You know, if we break out over this 14,000 range, I wouldn't be surprised how fast it moves up. So. Alright guys, well that's our Wyckoff accumulation, events and phases, basically just kind of walking through those, getting a little general knowledge. Everything doesn't happen exactly how it is shown here. Like I said, sometimes the spring will be before the sign of strength. Just keep your eye out for the different things, and as the pattern develops, you can start getting confirmations that we are in fact accumulating and not distributing, and that we are in fact going to be moving higher, moving to higher prices and to the upside, so that you can be part of the accumulation instead of having to buy after the breakout. Well, yeah, thanks a lot. I appreciate you tuning in today. I hope you enjoyed everything. Thanks for coming back to Crypto Trend Trader channel. If you did enjoy the video, please give us a like, follow, and subscribe, or leave a comment if you want to see something in particular. Glad to be able to go over different charts or you know, different patterns for people, different coins. All right, well, thank you very much for tuning in. Have a great day, and we'll see you again soon.